All right. All right. So welcome once again to today's revision class. Um so this is a revision class for the um May exam, May Diet 2025 and of audit and assurance ICAN. And I believe you've been following us since the beginning of this diet, since the first class till this moment. So okay. If you haven't been following us, I believe you've also had access to the recorded version of these classes. The classes are always recorded, so please do well to request for the recorded version of these classes on the Telegram channel, and it will be provided onto you. And if you also need extra materials, very good as recorded video lectures and recorded um, sessions on past exams, questions and answers, which you can use in studying. So, so for the past 10 to 12 weeks, we've been looking at some topics. We started with objectives of audit and assurance. Then week two, we talked about legal and regulatory frameworks, for statutory audit and assurance, legal and regulatory frameworks for statutory audit and assurance. Then week three, we talked about the process of audit and assurance. That was week three. We talked about the process of audit and assurance. Then week four, we talked about the nature and use of internal control. The nature and use of internal control. Then then week five, we talked about gathering evidence. We talked about gathering evidence on week five. Then week six, we talked about the professional ethics and public interest. We talked on professional ethics and public interest. Then week seven, we talked on applicable standards. Week eight, we also talked on applicable standards. So applicable standards is a topic in audit and assurance that is quite bulky. So it's extended for up to it's extended for up to it's extended for up to 3 weeks, which spans from week 7, week 8, and week 9. Then we concluded with conclusion and reporting. That was week 10, conclusion and reporting. So we're currently in the revision week now in preparation for your exam, which is that a week or 2 weeks time. So um I have some questions here of some questions here we can use in revision, questions that you can expect. So the first one says explain the concept of auditor independence. Explain the concept of auditor independence and its importance in the audit process. Then we also ask to discuss the threats to auditor independence, discuss the threats to auditor independence and the safeguards that can be implemented to mitigate these threats. And the safeguards that can be implemented to mitigate these threats. So So when we are talking about it refers to the ability. Auditor independence refers to the ability to perform an audit with an unbiased. It refers to the ability to perform an audit with an unbiased mindset. Perform an audit with an unbiased mindset. Okay, I hope you can see my screen. Okay. Okay, so the auditor independence The auditor independence refers to the ability to perform an audit with an unbiased mindset. So it ensures that the auditor's judgments and opinions are not influenced by personal or external pressures. So that's what auditor independence is all about. Then the independence encompasses two aspects: the independence in facts the independence in facts, that is the auditor's ability to act with objectivity and impartiality. The auditor's ability to act with objectivity and impartiality. And we also have independence in appearance. Independence in appearance. Independence in appearance. So then So independence in appearance is the perception by stakeholders that the auditor is unbiased. Independence in appearance is the perception by stakeholders that the auditor is unbiased, just as it says appearance. So then we have the importance of independence. We have the importance of independence. We have one, credibility of financial statements. Independence ensures that the audit opinion is trusted by users of the financial statements. Independence ensures that the audit opinion is trusted by users of the financial statements, such as investors and regulators. Now, we also have compliance with standards. Compliance with standards. Independence is a cornerstone of international standards on auditing. Independence is a cornerstone of international standards of independence is a cornerstone of international standards on auditing, ISCs, and professional ethic codes, such as the AFAC Code of Ethics. Then we also have public trust as an importance of independence. So an independent auditor instills confidence in the integrity of financial reporting. An independent auditor instills confidence in the integrity of financial reporting. Then we have mitigation of legal risk. Mitigation of legal risk. So independence reduces the risk of legal action against auditors due to biased or misleading opinions. Independence reduces the risk of legal action against auditors due to biased or misleading opinions. Due to biased or misleading opinions. Then we also have threats to independence. Threats to independence. So we have one, self-interest threats. So we have one is self-interest threat, which arises from financial interest in the client. Self-interest threat arises from financial interest in the client, such as shareholding or dependence on client fees. Then we have the example. Example is the audit firm depends on a single client for a significant portion of its revenue. The audit firm depends on a single client for a significant portion of its revenue. And another threat to independence is self-review threat. Self-review threat occurs when the auditor reviews their own work or systems implemented by their firm. Self-review threat, it occurs when the auditor reviews their own work or systems that are implemented by their firm. So an example is an audit firm that is preparing financial statements and auditing them. An example is an audit firm that prepares financial statements and also audits them. Then we have advocacy traits. So advocacy traits occurs when the auditor promotes or defends a client's position, undermining objectivity. So an example is representing an auditor or representing a client in a tax dispute. So that is advocacy traits. The auditor is advocating for the client. We also have familiarity traits. Familiarity traits result from close relationships with client personnel. close relationships with client personnel that could impair objectivity. An example being a partner's relative holding a key position in the audited entity. A partner's relative that is holding a key position in the audited entity. Then we also have intimidation threats. Intimidation threat. So intimidation threat occurs when the auditor is subjected to pressure or threat by the client. Intimidation threat occurs when the auditor is subjected to pressure or threat by the clients. An example being when the client threatens to terminate the auditor's contract if an unfavorable opinion is issued. So that is intimidation threats. Now let's look at ways to safeguard and mitigate threats. Ways to safeguard and mitigate threats. So we have one, firm level safeguards, which involves rotation of audit partners to limit familiarity threats. Rotation of audit partners to limit familiarity threats. We also have policies. We have policies. We have policies to avoid significant client dependence. We have policies to avoid significant client dependence. Then two, engagement specific safeguards. Engagement specific safeguards. So independent quality, the specific safeguards involves independent quality control reviews, independent quality control reviews, then also assigning staff without conflicting relationships, assigning staff without conflicting relationships. Then three, another way to safeguard, another safeguards to mitigate threat is regulatory safeguards. Regulatory safeguards involves compliance with professional codes, compliance with professional codes such as the IFAC code, the IFAC codes of ethics or national, and enforcement of legal restrictions on non-audit services, enforcement of legal restrictions on non-audit services for audit clients. Then lastly, we have personal safeguards. Personal safeguards, that is declaring conflicts of interest and recusing oneself from engagement. Declaring conflict of interest and recusing oneself from engagement when necessary. Then we also have maintaining professional skepticism. Maintaining professional skepticism throughout the audit process. Maintaining professional skepticism throughout the audit process. So auditor independence is non-negotiable in maintaining the integrity, reliability, and credibility of the financial reporting process. Auditor independence is non-negotiable in maintaining the integrity, reliability, and credibility of the financial process. So, okay, so that's that on independence, on on that's that on auditor independence. So the question number two says, discuss the role of management. Discuss the role of management in establishing and maintaining effective internal control systems. Explain the responsibilities of management in designing, implementing, and monitoring internal controls and the consequences of ineffective internal control practices. So the management plays a critical role in establishing and maintaining effective internal control systems to achieve organizational objectives. The management plays a critical role in establishing and maintaining effective internal control systems to achieve organizational objectives, manage risk, and promote transparency and accountability in organizational operations. Then, the responsibilities of management in designing, implementing, and monitoring internal controls include establishing clear objectives and control environment and control environment, identifying and assessing risk to the achievement of objectives, designing and implementing control activities to mitigate risk effectively, ensuring adequate segregation of duties and levels of authorization and approval. Also, maintaining accurate and reliable financial information, promoting compliance with laws and regulations, and monitoring and evaluating the effectiveness of internal control systems periodically. Then consequences of ineffective internal control practices may include financial losses. Consequences of ineffective internal control practices may include financial losses, misstatement of financial statements, non-compliance with laws and regulations, damage to reputation and brand image, loss of investor confidence and regulatory sanctions, loss of investor confidence and regulatory sanctions or legal liabilities. Then we have effective internal control practices. Effective internal control practices require active engagement and commitment from management, board oversight, and collaboration with internal and external stakeholders to address risks and vulnerabilities and enhance organizational resilience and sustainability. Then moving on to question 3. Question 3 says, discuss the hierarchy of auditing standards. Discuss the hierarchy of auditing standards and the relationship between international and national auditing standards. Discuss the hierarchy of auditing standards and the relationship between international and national auditing standards. Then explain how auditors navigate the hierarchy of standards to comply with applicable requirements in different jurisdictions. Explain how auditors navigate the hierarchy of standards to comply with applicable requirements in different jurisdictions. So the hierarchy of auditing standards, it comprises international standards, national standards, and firm specific standards. So international standards, such as the international standards on auditing ISs issued by the International Auditing and Assurance Standards Board, IAASB. It provides a global framework for audit engagement. The national standards such as the generally accepted auditing standards in the United States or the International Standards on Auditing, UK, in the United Kingdom, may supplement or modify international standards to address specific legal or regulatory requirements in a particular jurisdiction. So firm-specific standards such as those developed by large audit firms, firm-specific standards such as those developed by large audit firms may further customize audit procedures or methodologies based on the firm's specific policies, or practices. Then auditors navigate the hierarchy of standards by identifying the applicable requirements in their jurisdictions, and ensuring compliance with the highest level of standards. Now, in jurisdictions where national standards diverge from international standards, auditors may need to reconcile any differences. Auditors may need to reconcile any differences and apply additional procedures or disclosures to meet both sets of requirements. Now, by understanding the hierarchy of standards and the relationship between international and national standards, auditors can ensure consistency and compliance with applicable requirements in their audit engagements. So, the question number 4 says, explain the significance of internal controls in an organization. Explain the significance of internal controls in an organization and how auditors assess their effectiveness. Explain the significance of internal controls in an organization and how auditors assess their effectiveness. So, internal controls are processes, policies, and procedures implemented by an organization to ensure that the integrity of financial accounting, to ensure that the integrity of financial and accounting information promotes accountability and prevents fraud. So the significance of internal controls in an organization cannot be overstated. The significance of internal controls in an organization cannot be overstated as they play a critical role in achieving the organization's objectives, safeguarding assets, and ensuring accurate and reliable financial reporting. So we have the following significance of internal controls. We have one, reliability of financial reporting. Internal controls help ensure that the financial statements are accurate and reliable. They provide a framework for recording transactions, processing data, and preparing financial reports in accordance with established accounting principles and standards. Then, compliance with laws and regulation. Internal controls help organizations comply with applicable laws, regulations, and contractual obligations. They ensure that the organization adheres to legal requirements and avoids penalties, fines, and legal issues. Efficiency and effectiveness of operations. Internal controls contribute to the efficient and effective operation of an organization. They help streamline processes, reduce waste, and improve overall performance by ensuring that resources are used appropriately and objectives are met. Then, four, safeguarding of assets. Internal controls protect an organization's assets from theft, fraud, and misuse. Internal controls protect an organization's assets from theft, fraud, and misuse. They include measures such as physical security, access controls, and authorization procedures to prevent unauthorized access and ensure the proper use of assets Now, five, we have prevention and detection of fraud. So internal controls play a crucial role. Internal control play a crucial role in preventing and detecting fraud. They include mechanisms such as segregation of duties, reconciliation procedures, and independent reviews to identify and address fraudulent activities. So how auditors assess the effectiveness of internal control? So one, we have understanding the control environment. Auditors begin by gaining an understanding of the control environment, which includes the organization overall attitude awareness, and actions regarding internal controls. This involves evaluating the tone at the top, management's commitment to ethical values and the organization structure. Then we also have risk assessments. Auditors perform a risk assessment to identify areas where the risk of material misstatement due to fraud or error is higher. So this involves analyzing the organization's processes, transactions, and controls to determine where weaknesses may exist. Then three, we have design and implementation of controls. So auditors assess the design and implementation of internal controls to determine whether they are appropriately designed to prevent or detect material misstatements. So this involves reviewing control documentation, policies, and procedures. Then we also have for testing of controls. Testing of controls. Auditors perform test of controls. Auditors perform test of controls to Auditors perform test of controls to evaluate their operating effectiveness. This involves selecting a sample of transactions and activities to test whether the controls are functioning as intended. So testing may include inspection of documents, observation of processes, and reperformance of control activities. Walkthrough. Auditors conduct walkthroughs to trace a transaction from initiation to completion. Auditors conduct walkthroughs to trace a transaction from initiation to completion, observing the controls applied at each stage. This helps auditors understand how controls are applied in practice and identify any weaknesses or gaps. Then inquiries and interviews. Auditors conduct inquiries and interviews with management and staff to gather information about the internal control system, control procedures, and any issues or concerns related to controls. Evaluating control deficiencies. Auditors evaluate any identified control deficiencies to determine their significance and potential impact on the financial statements. So they classify deficiencies as control deficiencies, significant deficiencies, or material weaknesses based on their severity. Then we have communication of findings, we have documentation, we have continuous monitoring. So the components of, okay, so the last question says define audit risk and explain its components, discuss how auditors assess and respond to discuss how auditors assess and respond to the risk of material misstatements during the planning and execution phases of an audit. So when you're talking about audit risk, audit risk refers to the possibility that the auditor expresses an unqualified opinion on financial statements that are materially misstated. It reflects the likelihood of errors or fraud going undetected during the audit process. During the audit process, during the audit process. So components of audit risk, we have inherent risk, we have control risk, and we have detection risk. So the audit risk model, we have audit risk model equals the inherent risk times the control risk times the detection risk. So assessing and responding to risk, we have the planning phase, which includes understanding the entity, identifying the risk, assessing materiality, designing the audit approach. Then we also have the execution phase, which includes testing internal controls, substantive procedures, reassessing risk. So by assessing and responding appropriately to risk, auditors minimize the likelihood of audit failures while ensuring compliance with professional standards. So that's that with the questions, the few questions I prepared for the revision class, and I hope this has given you a little insight to what we've done this diet and can give you more areas to revise more on before your exam. So I wish you success in your forthcoming exam and um okay, so we should be having a challenge session coming up very soon, which the information will be passed on to you. However, if you have any question, if you need anything, the Telegram channel is up and available for you. Do well to drop whatever question you have on the Telegram channel and it will be attended to. So, wishing you a success in your forthcoming exams, and I hope you come out with outstanding grades. So, till we meet again, bye and have a nice week. Okay, so for the revision notes and recording, it would be please request for it on the Telegram channel and the if I hope you're on the Telegram channel, request for it on the Telegram channel and the admin would attend to you because there's a drive for you, so you'll be given the link so you can access it. All right, so that's that. Have a nice week ahead. Bye.